Okay, you just said rich developer finds site. So let's kind of now move into like how you underwrite, think about things, how you raise money. What did you mean by rich developer finds a site? Do they just find a site and say, found this site, hey, Four Seasons, I'm going to build all the real estate and you're going to operate, you're going to basically sign a lease with me? Like, how does it work?
So in the case of that, and there's other companies, it's not just Four Seasons, but everyone wants to own a hotel because it's typically a great investment because in good times, you're generating all this cash flow, but it's one of the only real estate asset classes where you can go inside, live it, breathe it, share it with your friends, stay there. Like, you're not going to hang out in your Class B industrial site, right?
Any friends I'm taking to hang out there, it's more for punishment than for hanging out.
Although I had fun at Carbone last night, and that was like a warehouse. So I think you have a future in doing some amazing
I agree.
Lifestyle industrial spaces.
Many calories have been killed at Carbone's for me.
I bet.
There. It's awesome.
It's good. So typically you'll have a developer who wants to bring in a hotel because there's going to be a compounding effect. Maybe he owns other real estate around there. The other thing that adds is if he's trying to sell condos or she's trying to sell condos, the hotel name and the service and the experience will add a level of prestige that will help drive those sales. So that's one way. And then they sign a deal with a well-known management company. They'll brand it, they'll create it, and they're just like a hired manager. So they get paid a fee. It's normally 3 to 4% of revenues. And then all of the expense, all of the profit goes to the ownership. Maybe there's a little bit of profit sharing at the bottom. What we do is a little bit different because we're vertically integrated. So we find the investment, whether it's a development deal or an acquisition deal. And oftentimes we will create the brand, we will create the business plan, and then we'll layer in our management company on top to go execute.
Okay.
So we've been growing, and it's hard because we have to find the real estate and then go do the deal. We're now getting to the point where our management company has scaled so much where we are talking to other people about doing what we do for ourselves for others, whether that's managing their hotel, maybe it's joint venturing on a deal. Someone owns the land, they want to build a hotel, they don't have the expertise. Those are some great deals that we've gotten into where you have a smart real estate investor, wants a hotel, we'll invest, we'll manage and execute, help them get debt, put the deal together, design it. And it's a tremendous value add because if you're not in hospitality, it's really hard to do it on your own.
Is managing tough if you are managing lots of different brands? Like, does each brand require you to manage differently? So you have to learn all these different playbooks, or is it all pretty much the same?
It's all pretty much the same, but they all have their own little brand standards and the things that they do. But we like to have the Wurzak way, Wurzak Hotel Group. We want to do it in our way, which is always a little bit elevated. It was interesting because, again, like I was at these couple hotels the past few days. I'm like, man, I give my team a hard time. Like, we actually do things really well, but like in all businesses, you have to have a little bit of tension with your operating team, your designer, your architect to really make the magic happen.
Yeah. Okay. So you find a good site. What do y'all look for? Like, what are you looking to buy? There's lots of hotels out there. Obviously, what are the ones that check your box, assuming, good price? We'll skip over the it's just really cheap, I could buy it for a great price. What is something you would want to hold forever?
So that's like a totally different category. We have really 3 strategies right now.
Let's talk
Basically, it's discounted purchase price, value add execution. We're going in and buying an asset that currently exists, that we're getting at a good price, that we think we can significantly improve revenues by upgrading the management, doing a value add renovation, repositioning some area of the hotel to create value. Might be adding a bar by the pool. It might be redesigning the lobby so it doesn't look like, something out of a 90s furniture catalog. And that's one strategy. The second strategy is these lifestyle and boutique hotels. And that's really converting an existing building or an existing hotel into something that's highly differentiated, that's going to outperform the market because everyone wants to be there, that has a big food and beverage component tied to it, that is very design forward. It's either independent, like it's not affiliated with Hilton or Marriott, or maybe it's a soft brand, but it's not a Marriott, Westin, DoubleTree, Hilton, something like that. And then the third strategy is structured equity. So right now, capital is very much available. Debt is a challenge. We can come in, provide gap equity, add strategic value as a partner, don't need to take control. We know the asset, we know the market. We're coming in, we're deploying capital in a very specific way where we're getting a preferred return before the common. And it actually, in some cases, enables the common to get an outsized return because our return might be capped. So that is 3. The 4th is compact full service development.
Okay.
Building these big master resorts take a lot of time, a lot of money. There's a lot of risk. By the time you get done with one of them, you could have missed the market. There could have been a lot of things that happened during that time. So compact development is something we like because you can build a hotel within 2 years. It doesn't have these big, massive ballroom spaces where you're worried, like, am I going to fill this? There's a great bar. There's a great rooftop bar. The room sizes are great. And it's like right woven into the neighborhood. So from a development standpoint, that's where we're focusing on. In the next 3 years, though, I want to buy a never sell asset, which is this iconic asset that could never be reproduced, could never be built again. Might be because construction costs are too crazy. The location is just never going to come up again, but it's always going to be a hotel that you can just add a little bit to, add a little bit to, add a little bit to, and constantly drive value for a generation or multiple generations.